Welcome to Motley Fool Money. Thanks for being here. I'm your host, Chris Hill, and joining me in studio this week from Motley Fool Inside Value, Joe Magyer, from Motley Fool Income Investor, James Early, and from $1 Million Portfolio, Ron Gross. Good to see you guys.
Woo!
Happy Turkey Day.
Yes, we've got it's
Right off the bat.
It is the one show of the year. Longtime listeners know this. It's the one show of the year where we actually have a sound effect. Thanksgiving weekend, Black Friday weekend, it gives us the chance to sort of step back from the news and sort of look at stocks that we're thankful for, as Steve Roydo, our man behind the glass, indicated with the sound effect.
That's actually Steve, people don't realize. That's not a sound effect.
Stocks that are turkeys. But before we get into sort of the Thanksgiving theme stuff, Ron, I want to start with you. We're heading to the end of the year. We've seen some interesting activity over the last couple of months where you look at mid-September, the market was kind of at a high, and it's kind of come steadily down from that. As we head into the last month of the year, what is a stock-centric question that you have that, as an analyst, you're sort of wrestling with a little bit?
I really want to understand what is next from Microsoft. I've got a big stake here, professionally, personally, and there's a lot going on here. Smartphones, tablets, PCs, Windows 8, a lot of unknowns. I'm going to be watching really closely. I have them on a short lease. The numbers tell me it's cheap, but there's a lot of uncertainty.
I think just based on his body language, Joe Magyer would like a rebuttal.
I was just trying to. I didn't want to say anything, Snarky. I mean, come on. Come on.
What did I say that you don't agree with?
Well, I
don't want to parse what you said, but I think you're right that there are certainly a lot of opportunities out there in terms of.
And I think
Exactly.
I think this is important. An analyst can make a mistake by just looking at the numbers and saying that's cheap. What you have to do is you got to look behind the numbers, and I'm a little concerned, and that's what I'm going to be doing.
When do you think you're going to get an answer? Obviously, there are a lot of moving parts, but
probably when it's too late, Chris.
But like the middle of 2013, is it the next
6
quarter?
months, I'll have probably a good handle about whether this thesis is playing out or not.
Yeah, I mean, I'd say Windows 8 is pretty crucial. The problem with the Windows or the Microsoft thesis is it's always like 1 year away, one iteration of Windows away, and people say, well, I'm going to hang on through this catalyst.
That's true.
It never does it.
James Early, what's your question?
Chris, I'm going to step back and think more macro for a moment and talk about the dividend tax rate. This is something that affects a lot of people, and we're likely, with the fiscal cliff, we're likely to see some sort of a rise, probably more for higher earning people. I'm doubtful that we'll see the whole dividend tax rate revert to ordinary income rate for everybody, but how that hashes out is something that I'm obviously watching it as an income investor advisor very closely.
We saw recently Walmart come out, and they were going to pay out a dividend the first week of January. They moved it. It's now the last week of December, so obviously that's a tax benefit for their shareholders and certainly for the Walton family itself. As we get closer to the end of the year, do you expect to see more companies doing this type of thing? I think you talked the other day about Wynn Resorts and sort of the one-time. Do you think we're going to see more of these sort of like one-time payouts?
I think we will. I think that's a good prediction.
Joe Magyer, what's your question?
Well, I think James's question was great, and to bring it back down for macro a little bit, though, I'm wondering at what point everyone stops being a macro armchair economist. Like, everyone thinks that they're a supreme brilliant thinker on the macro economy, and it's so difficult to think about what the world is doing in a macro sense. Instead, it's a lot easier to look at company level fundamentals, and I just wonder at what point investors stop trading in baskets, risk on, risk off, and go back to looking at companies.
Are you talking about individual investors, or are you talking about people in the financial media? Because if you're hoping for people in the financial media to step back from being armchair economists, I think you're going to be waiting a long time.
It could take a while. I mean, a few years ago, what happened with the financial crisis is suddenly everyone started saying, oh, well, macro matters, and it does matter, but fundamentals matter too at the company level. And I guess, as a bottom-up guy, I'm mostly happy that investors aren't paying attention to company fundamentals, but it's fascinating to watch.
Let's move on to the Thanksgiving portion of the show. And Ron, we'll get to turkeys in a minute, but one stock you are thankful for, Ron?
This year, Lumber Liquidators has been very, very good to us. We really stock's a double for us, actually a triple for some folks. As the housing recovery took hold, stock shot up. We had taken the opportunity early on to add to our position when it just got decimated, and I'm very thankful that we stuck to our guns with that one.
I like the accent too.
Thank you very much.
I was going to say we saw some more housing data come out this week, and it seems like the drumbeat for the housing recovery is here or is getting stronger. Just seems to be getting louder and louder. Is lumber liquidators, is the benefit to that already priced in, or is this a stock that still has some room to run?
Well, I'm going to go with both of those things. We actually lightened up on our position significantly, took profits at what we think is somewhere near the top, although it's obviously impossible to tell. We've kept a smaller position to hopefully ride out whatever is left.
James, a stock that you're thankful for?
Chris, I'm going to go, well, let me just phrase it like this. So despite metal shavings in their medicines, despite chemical-laced pieces of building shipping pallets, wooden shipping pallets, despite a mystery shopper recall scandal, Johnson & Johnson managed to rise a little bit more than 10% in the past year or so, or just about 10% in the past year. It's sort of at a near-term high at least. So I'm thankful for that. This was a stock that a lot of people left for dead.
The last time Johnson & Johnson reported earnings, we talked about how wonderfully surprising it was that there were no mishaps, that there were no recalls in the quarter, that kind of thing. I don't want to get greedy as a longtime shareholder, but is that the kind of thing that potentially we could expect to see more of in the future, meaning more of these quarters where the story is all about the operations and not about, oh, by the way, we had another recall?
Well, hopefully, Chris. The new CEO was mildly tainted with his own, drug marketing scandal issue. But you wonder how. I mean, they can only screw up so many times, right? And another thing, though, counterbalancing is the consumer product segment is smaller than people think as a percentage of revenue, and it's growing smaller by the year as they get more and more into medical devices. So that and prescription drugs, the prescription sensitivity to the scandals is not that severe. In other words, doctors tend to keep prescribing the medications even despite the consumer issues.
So don't hold my breath. That's what I heard you just say. Don't hold your breath.
Yeah.
Joe, a stock you're thankful for?
Visa, it's up about 50% over the last year. People keep swiping their debit and credit cards. Very happy with that. And it turns out the Durbin Amendment wasn't the huge sweeping piece of legislation affecting Visa like everyone thought it would be.
When you look a couple of years out and you look at how mobile payment is changing over time with startups like Square and that sort of thing, how do you feel about Visa's position within that universe?
I think they're in a good position in that they can buy their way into a lot of relationships. They own about 10% of Square, and they have a lot of scale and relationships with banks and customers that they can tap.
All right, it's the part of the show that Steve Roda's been waiting for. It's time for the stocks that are turkeys.
Cue the turkey.
Ron, what do you got?
So many, so little time. How about Dell? A company, as I've said many times, I've owned for, a decade.
Yep.
And I firmly am in the camp of buy and hold, but I think it's a mistake to buy and forget, which frankly is what I've done. And I think you constantly have to reevaluate your holdings and your thesis and why you own something. And this stock has just gone down and down and down as the business changed and the world changed, quite frankly. And it has just been a disaster for my personal portfolio.
James?
I'm going to go with Intel. This is a stock that was very good to me for a while. Analyst Joe Tenebruso recommended it, and it was a great pick for income investor. It's been dropping about 16% year to date. The CEO just suddenly bailed recently. We've been hearing this rhetoric about their chips having power parity with AMD's chips, and that's been the issue about getting them into mobile devices. The Intel chips just use too much power. But I just got to wonder, when's that going to happen? Where's the beef here?
I don't know, Ron. When there's the old saying about if everyone in the room sort of took their problems and shoved them into the middle of the room, you would take your own problems back.
Right.
Because when you say, so, I mean, you just talked about Dell.
Yeah.
James just talked about Intel.
Wah.
I was going to say, do you want to trade him straight up your shares of Dell for Intel?
Yeah, anytime.
I was going to say, because, I'm not indifferent to what you're saying, James, but it just seems like that's a much smaller turkey.
It's like when they ask you what your biggest weakness is on a job interview, and you're just like, I'm just too darn diligent.
I work too hard.
I work too hard.
I'm a workaholic. Joe Magyer, what do you got?
I'll round out the PC trinity with Hewlett-Packard. These guys got scalped this week. PC sales were down again. Every business unit was suffering. The only one that did somewhat okay was software, but within software, they did an $8.8 billion write-down on Autonomy, which is a wildly overvalued business they bought about a year ago. They're claiming that there were shenanigans. I don't know which is worse, that they overpaid so much for Autonomy or that it took them almost a year to realize they were cooking the books.
Disaster.
In any case, it's a total disaster.
We've talked about CEOs being on the hot seat. When you look at Meg Whitman heading up Hewlett-Packard, how much time does she have to fix this mess?
I don't know. I think she'll end up quitting.
Really?
I would if I were her. I mean, in fairness to her, it's not her fault.
Right,
Like,
she
this
wasn't
mess
there
was-
at the time of the acquisition, was she?
No.
But she did approve it when I think she was a board member. Is that fair to say?
Yeah, I mean,
Yes.
she walked right into this. It was definitely a bad job to take, frankly.
Can we give Best Buy an honorable mention for this segment, please?
That's a good
Absolutely.
turkey.
I think, yeah, I was going to say, for all the times that we've, you know what, we should bring in Steve as well, because as we've talked about, and as longtime listeners know, Steve Broido, a very involved investor.
Did you say prescient? I don't even know what that means.
I don't either. Steve, I'm just going to be unfair and say you don't get to give the stock you're thankful for, but I know you've got at least one turkey that you'd love to rip on, and you've got your finger on the sound effects button. So what's a turkey stock for you?
I bought something called Pulse Electronics recently, and I paid this insane dividend, and I was like, this is just great, and it's just gone nowhere but down.
What does Pulse Electronics do?
They do electronics things.
That Pulse.
They make parts for electronics, and they just paid it like a 25% dividend, and I'm like, this is great, this is terrific, and it's just died. It's terrible.
Coming up.
Very affordable though right now. Very affordable. For bargain hunters out there.
Coming up, Black Friday means bargain hunting, so we will look at a few stocks that are trading at bargain prices. That's next. Stay right here. This is Motley Fool Money. As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. Welcome back to Motley Fool Money. Chris Hill here with Joe Magyer, James Early, and Ron Gross. Guys, before we get to the bargain stocks, the Black Friday portion of the show, I don't know about you, but Thanksgiving means not only second helpings, but third helpings, fourth helpings for me. But let's just go with second helpings, and in this case, it's a stock that you already own that you'd love to just double down on, that you're inclined to maybe go back and buy a few more shares. Ron, what do you got?
At the risk of Joe wringing my turkey neck, I'm going with Apple. Stock's off 20% from its high. Sure, there are some issues. It isn't infallible. It isn't, they are human, even though it's a company. But I think there's significant upside here at current prices, and I would go back for more.
Joe, do you want to wring his
I'm
neck?
tired of always being the bad guy here.
James, what do you got?
I'm going with waste management. I see a 39% upside from here, 4.5% yield while we wait for that to happen. The trash business is surprisingly cyclical. The stock hasn't really rallied like I would have hoped, but just like we're not going to stop flushing our toilets, we're not going to stop generating trash. We're always going to do that. So long term, it's a steady business.
Is that something that goes hand in hand with housing? I mean,
Construction is a big. Construction generates a lot of trash, and that's part of the reason it's not been doing as well the past, let's say, 4 or 5 years.
Joe, second helping?
TD Ameritrade, and this is a business I love, and I've talked about it on the show a bunch of times. They keep adding new clients faster than their rivals, which is great, adding new assets. Right now, trading volumes are near historic lows, very low levels, same with interest rates, and when both of those come back, profits are going to rise in a big, big way.
I don't know about you guys, but Black Friday has never really interested me, the whole facing the crowds and all that sort of thing. But there are people who love to shop for bargains in the mall, and then there are investors like you guys who love to shop for bargains on Wall Street. So when you look out there, and Ron, you just mentioned, Apple off 20%, its high of a couple of months ago. It's not the only one trading at a discount. What do you see out there?
A couple of we follow several consumer retail stocks, but I think Aeropostale. I'd love to see people head to the malls, buy a cheap T-shirt, help us out. Stock looks cheap there, and also a Perry Ellis I actually like very much. PERY looks undervalued to me.
Aren't you dapper?
Yeah.
Well, I didn't say I wear it; I said we own it.
James?
I'll actually second Ron's suggestion of mall-based retailers. Guess I feel is pretty cheap. If you want something a little bit riskier and you're willing to take macro risk, France Telecom has been pounded like 50% in the past, year and a half. Yields 9%. That's after a dividend cut. So that's a little bit spicier, but potentially more upside.
Does the fact that they cut their dividend make you at all nervous that may be something that continues into 2013?
Oh yeah, it could definitely happen. But it's still not bad to get 9% return in cash.
True enough. Joe Magyer, what do you see out there in the bargain world?
Well, if you're willing to pay up for your bargains, I still like
Bargains
Amazon.
doesn't work.
Amazon's volumes are up about 40% year over year, and I think the market's really missing a lot of the story here. Revenue isn't growing as fast as volume because the volume, much of it is coming from growth on third-party sales, which are higher margin for Amazon. And so as a result, you're starting to see gross margins sneak above levels that analysts have been expecting. Balance sheet's in great shape. They're incredibly competitive going into the holidays. You look at Amazon.com, they've got 8 times the number of televisions carried at Walmart, and that level of selections kind of just ringing true all throughout the site. And that's why you see them growing very, very quickly online and the rest of their competition losing share.
Since I gave you the chance to rebut what Ron said, I kind of feel like I need to give Ron a chance to rebut the notion that Amazon is a bargain right now.
I love it as a Black Friday play, I think, and that's where I'll be shopping, quite frankly. Whether the stock is cheap, I'm going to leave that to Joe.
You're a gentleman.